Oh, yes. And, as you rightly pointed out, I mean, this is important, right, from an investor and a viewer standpoint as well. When you see such large promoters selling, you sort of get rattled. But experts telling us that no cause of worry here. But let's get back to the markets and understand some charting trends now. Rahul Sharma, the Director and Head Technicals and Derivatives at JM Financial Services, is with us. So let's get to him. Rahul, thanks a lot for joining in. I want to understand from you what's happening on the headline index, because this has been a slightly painful, a slightly frustrating period for investors where the market has been in this really tight range. Do you think this consolidation phase is something that can continue over the next couple of weeks? And if yes, will all the action be in the broader markets now?
Yeah, morning, Sonia. So clearly, in the last 3-4 weeks, we've seen a downward grind in the markets. This is the first time since COVID we've had 4 negative weekly closes on the Nifty. The breakdown was becoming a consensus trade, in which is exactly why we're seeing a bounce back happening from 19 to 50 odd levels. Now, two forces at play here. One is you have a broader market which is not ready to give up. You have the mid cap and the small cap indices continuing to do well. The broader market participation has not waned out. On the second side, you have the aggression on the short side, especially from the FIs, has not gone up in the previous week. So in spite of the Nifty heading towards the 250 mark, we've not seen additional shorting in any way whatsoever from the institutional part, which is also the reason why we're seeing a bounce back happening. Now, in the very short term, I think once 19,500 is taken out, we should see the current consolidation, the current pullback or time correction ending, and then the Nifty getting back to where it is, which is on the way up, where we feel the 20,000 level should be taken out, and eventually we should be headed towards 20,800 by the end of this year. So this is a good opportunity to accumulate longs to buy in this correction. We feel the risk reward is still favorable. In case there is some bout of volatility, now 19,000 is a very solid base for the Nifty. Maybe around 18,800, one can have a stop loss for long positions. Look to buy in this volatility, and we feel there is a good chance that the second leg of the rally moves starts beginning from here. What is also heartening to see is the sectoral rotation that is happening. So we saw banks taking a backseat, IT coming back into flavor and limelight, and we feel this is one sector which should continue to do well. We've seen PSE, the star sector amongst the market, and now we are seeing green shoots in the chemical space as well. So broadly, the markets are shifting, and this is a good and healthy sign that after a correction, we are seeing new leaders emerging.
All right. Hi, Rahul. Good morning. First of all, congratulations. This fitness mantra has worked out perfectly for you. So good on you, mate. But since we are here to talk about markets, and you're expecting the markets to gradually move towards the 20,000 odd mark. On the Nifty Bank, that one was the leader. It's taken a bit of a break. But what's the trajectory out there? What are the levels you're looking at on the Nifty Bank?
Yeah, so Nifty Bank is exactly the area where whatever shorts have been added in the August series have gone. So we started the August series or the expiry of July series somewhere around the 1.3 lakh contracts. Now that has gone up to around 1.5 lakh contracts. What is happening is Bank Nifty surely has sort of been an underperformer, and this would, the price performance would continue to be on the languishing side going ahead. So I'm seeing a sectoral shift where we may see banks sort of, not do so well as compared to the market. And I think there is a strong case for an IT versus bank switch over here. So we've advised our clients to switch from the banking space and get into IT, which has been a gross underperformer since last 18 odd months. And we feel there is a good bit of alpha to be created from this space. So Bank Nifty continues to sort of, remain under pressure. The short covering hasn't really kicked in. But having said that, I think IT is a better bet as compared between the two.
All right, we would have loved to chat some more, but we've run out of time, unfortunately. Thanks a lot, Rahul, for joining us and giving us some trends on the charting side. Let's slip into a quick break. On the other side of the break, Manisha Gupta will join in. She'll give us a quick roundup on the commodity market. Stay tuned.